In this section, we're going to go over revenue recognition, and to explain it, we're going to make a revenue accrual. We'll go to Company, General Journal Entry. We'll see, make sure it's in the date of the month we want it to hit. And for reference, we'll say revenue accrual. And we want this to reverse. And we want the debit side of a revenue accrual to be accrued revenue. So hit accrued revenue. Say we're doing business for Kurt's Bandage. We'll say accruing revenue Kurt's. Let's say it's for $55,000. Then we want to hit revenue. We know that's in the 40,000 series, so we go to sales. We'll hit 55,000. Now, basically, to make this accrual and basically to recognize any revenue, there's several things that we have to fulfill. There has to be pervasive evidence an arrangement exists with the client, and that basically can be a contract. Say we have a contract with Kurt, signed an agreement to pay $55,000 for a certain service, or this contract could actually be for $100,000 and we've completed 55% of the job, so we can accrue $55,000 of that job without yet receiving the money. Another thing is delivery has occurred, and that means we had to have worked that, say, 55% of that $100,000 job. We've had to complete our side of the bargain. We've had to complete what we said we were going to do in order to receive such and such amount. Also, the price has to be fixed. It has to be discernible. It can't be up in the air. It can't be an abstract idea how much this revenue is going to be. It has to be a fixed price so that you could basically make an equation on percentage of completion. That there's an agreement with the client that he's going to or she's going to pay you such and such amount. And the last prerequisite of recognizing revenue and accruing for revenue is the collectability. Is that assured? I mean, you could go out and get a homeless person to sign a contract for $100,000, but you can't take that revenue because you know he's not going to pay that money. You're not going to get that money. So if you're not going to receive the funds, you cannot recognize that revenue. So basically you have 4 qualifications to take revenue. That's the pervasiveness of evidence, and an arrangement exists between you and the client. Delivery has occurred. The service rendered. The seller's price is fixed with the buyer, and collectability has to be assured. Once all of these are fulfilled, you can recognize revenue or accrue revenue like we're doing.